So let's shift to gold and silver. Now, gold and silver is a very, very, very highly manipulated commodity. They don't trade freely, and that's one thing you need to know as an investor in gold and silver. They're manipulated. The governments do not want gold and silver to go up. It's that simple. And they never have, because that's an indication of inflation. It's an indication of monetary debasement. It's an indication of financial instability. It shines the light on central banks and their very dangerous and foolish behavior of printing money to finance deficits. So through the big bullion banks, the Federal Reserve manipulates gold. And I told you last week, one day last week when Russia invaded Ukraine, gold was up $75 an ounce, and by the end of the day it was down 20. That's manipulation. Silver was up $1.10, went up down 30 cents. That's manipulation, because nothing changed. So how do you buy gold and silver, and how much should you buy in your life? Well, it depends. In financial planning school many, many moons ago, we were taught that, part of an asset allocation portfolio was 15%, 10 to 15% of your assets should be in gold and silver as a hedge against inflation and financial upheaval, geopolitical risk. Then back in the 90s, in the early 2000s, that went away. That slice of the pie disappeared to zero. Everybody looked at gold and silver as a relic of the past. No longer viable. Stocks and bonds was the place to be. Gold had gone down, was a high in 1980 of 850. Went down as low as 250. Silver was like $6 an ounce. And then something remarkable happened. Silver and gold started to grow in price as the Federal Reserve debased the currency, especially after 2008, when trillions of dollars were printed and injected into the economy. And that got even greater with the COVID situation and all the stimulus, trillions of dollars that were injected there. Then you had the quantitative easing, where the Fed was printing $120 billion a month and buying bonds. All this stuff was disastrous, and we talked about it on this program many, many times over the last couple of years, how it was going to end in inflation and possibly hyperinflation. And gold is the life insurance. I've always talked about gold as financial life insurance. When everything else is falling around you, whether it's the stock market, the bond market, whatever, gold and silver is your protector. It is your insurance policy. And I've always called it financial life insurance. It will save your financial life in a hyperinflation. Nothing's riskier to people more than inflation, especially if you have a lot of cash. Cash is trash in inflation. So you got money in the bank, earning nothing, while inflation is raging at 10% or 15%, whatever you want to calculate it as. It's not certainly the consumer price index, because we know that's fudged. But if it was calculated like it was calculated back in 1980, we're looking at 15% inflation, which is the high that we saw in 1980 when Paul Volcker raised interest rates to 20% to fight it. Little different world we're living in right now. So how do you buy gold and silver? A lot of people will send me emails or they call me up and say, Lou, I want to get a little gold and silver. How do I do it? Well, there's a number of ways of doing it. The first way is the physical way, which is probably the most optimal way. Physical gold or physical silver, where you hold it in your hand. They say if you don't hold it, you don't own it. I mean, because you have to get it from someone else. There's counterparty risk there. But if you have it in your hand, nobody can take it away from you. There's no counterparty risk. There's no liability to anybody. It is what it is. It can't fail on you. So one way to buy it is to buy coins. And the most common coins in the United States are American Eagles. They're 1 ounce coins. They're 1 ounce of bullion. They're worth what an ounce of gold or silver is worth, plus a premium. Let's take gold, for instance. Right now, I said the gold price is $1,972 an ounce. To buy an American Eagle gold coin, you're going to pay $2,080 right now. That's $108 over what's called the spot price. That's only a 5.5% premium, which is very customary for gold. 5-6%. That's the norm. So whatever the price is that you see on the COMEX exchange, which is the paper price, add to it the premium, and that's what you're going to pay. So you walk into a coin dealer right now, or you get online and you want to buy American Eagle, you're going to pay $2,080. Now, you don't have to buy ounce coins. You could buy tenth of an ounce coins. You could buy quarter of an ounce coins, half ounce coins. How many people could buy, a lot of 1 ounce gold coins at $2,080 an ounce? But let's take a look at silver. Silver right now, the spot price on silver closed at $25.79. Boy, if you can get an ounce of gold at ounce of silver at $25.79, that would be great. Because if you go to a dealer right now, and if you can get it, because there's shortages, a number of online places that I look at are out of stock. Because people realize, hey, I got to buy some inflation protection. You can't buy an ounce of silver right now, a 1 ounce American Eagle coin, for less than $36.87. That's $11.08 over the spot price. It's a 43% premium. Now compare that to gold. It's only a 5.5% premium. So this tells you that silver is totally mispriced. It is not $25 and change an ounce, the COMEX paper price. It's almost $37 an ounce. Because the real price is what it costs to actually buy it. Not with the paper market. No gold changes hands, or no silver changes hands in the futures market. These are just bets that are made. And the dealers can sell a year's worth of mine supply of gold or silver like in 10 minutes. Because it never changes hands. They just dump in futures contracts. They can push the price any way they want. Because no gold or silver changes hands. But in the real market, where you actually want to buy or sell silver or gold, it's much higher. So you can go to a coin dealer, a local coin dealer. Nowadays, there isn't too many around. I was Googling here in Monmouth and Ocean County. I think there's only 2 or 3 dealers that you can walk in a store and walk out with an American Eagle. Now, you see the commercials on Fox and Newsmax and One News. They're advertising Gold Line or Lear Capital. All these companies that sell gold. And they're fine. They're fine. I bought a significant amount of gold from one of those companies years ago. No problem buying it. It was delivered very, very quickly. It's kind of amazing because the Postal Service delivers your gold. And it was quite a substantial amount, and I was just amazed that, the mailman comes in here, sign for this, and here's the box, and there was gold in it. Now, it's insured and everything else, so you don't have to worry about anything, but it comes right through the mail. Pretty amazing. Locally, I don't want to give the name of the dealer that I use, but just when you Google coin dealers by me, this one's in Wall Township on Route 35. If anybody wants to know the name of the reputable coin dealer that I use, email me at lou@thefinancialphysician.com and I'll tell you the name. But now's the time. If you're thinking about, the time has passed to get a really, really cheap price on gold and silver, but it's not too late. Because central banks will continue what they're going to do. The world is more unstable than ever. Inflation is morphing into hyperinflation, as we talked about energy prices just a little while ago. In silver, there's something called a monster box. A monster box is 500 ounces. The problem with silver is, and I love silver better than gold because I think it's going to go up a bigger percentage, is that it's hard to store. 500 ounces of silver cost $18,435. 500 ounces of gold is $100,000. Actually, it's more than that. It's $1 million. So you can see, if you wanted to buy 50% gold, 50% silver, it's really hard because you can have so much more silver because it's so cheap. So there's two ways you buy it. You can go online to some of the big dealers. You got Goldline, you got Kitco, you got AppMex, you got Lear Capital, you got Rosalind Capital. You got all these companies. They're online. They're all reputable. The big thing is don't be talked into rare coins. They love to do that because there's a big markup in that stuff. You're not looking for rare coins. You're looking for bullion. And I don't care if you buy Canadian Maple Leaf, or Krugerrand, an Austrian Philharmonic. Gold is gold, silver is silver. I don't care. All you care about is that the bullion content is 99.99%, and the price of those coins are going to be pretty much the same, and it'd be relative to the price of gold and silver. Now, say you have most of your money in a retirement plan, an IRA account. Well, you don't want to take the money out of the IRA account to go buy coins because you have a tax situation. There's securities you could buy that give you exposure to gold and silver without actually holding it and owning it. Is it the most optimal way to do it? No. Optimal way to do it is to buy it, hold it, have it yourself. But if that's a problem, you could use exchange-traded funds, and you could trade them. Some of the ones that I like are the Sprott Physical Gold Fund, symbol PHYS. Trades on the exchange, and what this fund does is it owns gold bullion. So by owning shares of this fund, you're indirectly owning part of the gold. And it pretty much mirrors or exceeds the price of the metal itself. Year to date, the Sprott Physical Gold Fund is up 9.5%. Meanwhile, gold's only up 5.5%. So it's trading at a premium to the actual metal price. For silver, the Aberdeen Standard Physical Silver Fund, symbol SIVR, does the same thing that the Sprott Physical Gold Fund does. It owns physical silver. Up almost 12% for the year, which is pretty close to silver. Silver's up 10.6%, so this is up 11.8%. So these are two physical funds. Now, the big funds that trade, the big ETFs are GLD, which is the gold ETF, and SLV, which is the big silver ETF. The problem with these funds is they don't actually own all the metal they say they do. They own futures contracts. Why is that a problem? Because futures contracts mean somebody else on the other side of that contract has to perform. So if I bought 1,000 ounces in the futures market, I want the metal, and I could ask for delivery of the metal before the contract expires. I have to be confident that the other party has the finances to actually purchase the metal and deliver it to me. And what happens if they sold it to me at $1,800 an ounce and now gold is $2,500 an ounce and they don't, they're bankrupt. They can't deliver. Whereas the physical funds actually own the bars. They're in a bank, they're in a vault, they're audited twice a year. We don't have to worry about the counterparty risk. So those are ways you could own gold and silver. There's other ways too. Another way you could do it is to buy an ETF that owns mining stocks. Boy, gold mining stocks do exceptionally well, silver mining stocks, during periods of rising metal prices. Because their product that they manufacture or dig out of the ground, for every dollar that it goes up, it goes right to the bottom line. It costs no more to dig the hole if gold prices are $2,000 or $1,700. Yeah, you got inflation issues and stuff, but it has nothing to do with the actual metal price. So it goes right to the bottom line, and we're seeing this year GDX, which is the big, it's got 7 or 8 of the top gold miners in the United States. That is up big this year as gold and silver are going higher. And it's leverage. So if you have gold going up 10%, gold stocks tend to go up 30%. Now it's a double-edged sword. Gold goes down 10%, you can lose 30% too. So these things are not without risk. But there's ways of playing commodities. I mentioned before, there's ETFs that have food commodities, ETFs that have energy commodities. And boy, they're doing fantastic. And for many people, that would offset losses that they're experiencing elsewhere, either in purchasing power of their savings or in the stock market. Now, a lot of people are saying that, well, Bitcoin now is replacing gold as the. I don't believe that for a second. I don't believe that for a second. Gold has been around for 6,000 years. It's going to be around forever. And in the Bible, gold is mentioned 417 times. Silver is mentioned 320 times in the King James Version of the Bible. So silver and gold is God's money. And it will continue to be. The three wise men on Christmas that went to Bethlehem, what did they bring Jesus? Did they bring him frankincense, myrrh, and Bitcoin? No. They brought Jesus frankincense, myrrh, and gold. And let me tell you something. If gold is good for baby Jesus, gold is good for me, and gold is good for you. Now, in the Bible, there's a lot of negative sayings in gold and silver. People talking about wealth, and the real wealth is in heaven, and it's not here. The first mention in the Bible of gold is in Genesis. Genesis 2:11. Jim, you didn't know you were going to get Sunday school lessons today.
No, I didn't.
But hey, it's Sunday morning. People are getting ready to go to church. Why not give them a little bit of scripture today? So Genesis 2:11 states, the name of the first is the Pishon. It is the one that flowed around the whole land of Havilah, where there is gold. So be a good God-fearing person and make sure you have gold and silver in your life. All right, time for a break. 732-237-9626 is our call number. We take any question, any comment on any money matter right here on The Financial Position. My name is Lou Scatigna. Don't go away.